Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MIXUE Group interim report. MIXUE Group offers a diverse range of businesses and services, including production and sales of fruit drinks, tea drinks, ice cream and coffee products, provision of ingredients, packaging materials, and store equipment to franchisees, IT services, sales through a network of franchise and self-operated stores in multiple countries across Asia and beyond. The significant surge in MIXUE Group's stock price over the past year can be attributed to several key factors. The company's successful initial public offering, IPO, on the Hong Kong Stock Exchange was a major catalyst, with shares soaring 43.21% on its debut day. This was followed by robust financial performance, including a 23% increase in revenue and 34.4% rise in gross profit for fiscal year 2024. MIXUE's aggressive store network expansion, with over 96 new outlets added within a year, has also contributed to the stock price growth. The company's successful business model, offering ultra-affordable products through a robust franchise model, has allowed it to penetrate markets deeply, especially in lower-tier cities. Analysts' positive outlook on MIXUE's strong revenue growth and expanding margins has further boosted investor confidence. Overall, MIXUE Group's impressive financial performance, aggressive expansion strategy, and scalable business model have driven its stock price increase of over 41.38% in the past year. Net income and profit margins have undergone significant changes in recent years. Net income has increased by a substantial 96%, indicating a notable improvement in the company's financial performance. Profit margins have also seen some variations. The gross profit margin has improved from 81.7% to 82.7%, demonstrating a slight increase in profitability. However, selling and distribution expenses as a percentage of total revenue remain stable at 6.1%. On the other hand, administrative expenses have increased by 0.3 percentage points from 2.6% to 2.9%. The reason behind these changes lies in the company's shift towards a more efficient supply chain system. This strategic move has enabled the company to provide competitive one-stop solutions to its franchisees, ultimately contributing to improved financial performance and profitability. The company is indeed generating positive operating cash flow, a significant indicator of its financial health. The data reveals a substantial increase in net cash generated from operating activities, rising by 58.5% to RMB 17,611.8 million as of June 30, 2025. Additionally, the cash generated from operations and net cash flows generated from operating activities are both positive, with values of RMB 3,800,055 and RMB 3,275,383 respectively. These figures demonstrate a strong ability to generate cash from its core business operations, positioning the company for future growth and stability. The company's debt level has increased significantly over the past period, with a total increase of RMB 6,093,378. However, interest expenses have actually decreased by 52.3%, from RMB 4.4 million to RMB 2.1 million, indicating that the company is paying less in interest despite taking on more debt. Management's outlook and strategy. The company's management emphasizes its commitment to sustainable growth through digitalization. Key strategies include solidifying leadership in China's freshly made drinks industry, pursuing overseas expansion opportunities, and expanding store networks in China and Southeast Asia. The company will also strengthen infrastructure, enhance supply chain efficiency, advance digitalization efforts, and cultivate brand IP to elevate Snow King into a global cultural symbol. Management will closely monitor foreign exchange risks and focus on building long-lasting brands through operational improvements. The company has a history of paying dividends to its shareholders. In fact, there is explicit mention of dividend payments on page 39, where RMB 1,319 was paid out as dividends to non-controlling shareholders. This indicates that the company prioritizes returning value to its investors through regular dividend distributions. There are concerns about supply chain disruption. The company's financial summary highlights a possible concern due to foreign exchange losses and an increase in cost of sales from 2024 to 2025, which may indicate potential issues with procurement costs or supply chain efficiency. These factors could disrupt the smooth operation of the supply chain, affecting the company's overall performance. That concludes the financial summary for MIXUE Group. Feel free to comment below, and I will be happy to answer them when possible.